Conservative investors face an unprecedented situation in the financial markets. It is hard to imagine a more challenging environment for a risk-averse investor seeking to preserve and grow the purchasing power of savings. The problem that's plagued risk-averse investors for several years now is that interest rates are artificially held by central banks below the rate of inflation. This problem of negative real interest rates is the essence of the policy known as financial repression. Financial repression has many facets, but its principal features are interest rate suppression, inflation, and the expansion of government debt and central bank credit. It is painfully obvious that the interests of deeply indebted governments and the central banks that serve them are not aligned with the interests of risk-averse investors. The preservation portfolio is intended to be an antidote to financial repression for a risk-averse investor who has been deprived of a reasonable return on low-risk investments. The purpose of the portfolio is to earn an attractive return without getting pushed out on the risk curve. The preservation portfolio seeks to provide an alternative to low-yielding deposits and fixed income instruments on the one hand, and potential over-reliance on higher-risk investments on the other. The objective of the portfolio is to outpace inflation by at least 2% over multi-year timeframes while maintaining robust downside protection. Risk-averse investors dislike volatility and have a strong aversion to protracted declines in portfolio value. For a risk-averse investor, a key statistic when analyzing an investment is drawdown potential. How much can an investment decline peak to trough in value in an adverse market environment? The preservation portfolio is managed to limit drawdowns in hostile market environments to the mid-single-digit range while avoiding negative returns over 12-month periods. The portfolio is intended to provide peace of mind to a risk-averse investor. The portfolio is an extension of how we have been managing money for our conservative clients. We have had years of experience owning and monitoring the funds that were selected for the portfolio. We have had an opportunity to observe how they perform in a variety of market environments. The portfolio will typically hold between 5 and 10 funds. At all times, the portfolio seeks to reduce downside volatility through non-correlated investments in a broad spectrum of assets. The portfolio invests in both actively managed and indexed funds. Our decision of whether to favor active or passive investments depends largely on the market environment. When asset classes are cheap and offer a high margin of safety, we tend to favor low-cost passive investments. When a margin of safety is lacking, we tend to favor actively managed funds, which can employ a variety of techniques to mitigate downside volatility. Our monthly portfolio updates provide regular insight into the funds we use in the portfolio. The preservation portfolio is a distinctive, unconventional investment strategy. I don't believe you are likely to find a strategy like ours in the marketplace. Our objective of outpacing inflation by at least 2% while avoiding down years and limiting portfolio drawdown to the mid-single digits is distinctive. The particular combination of funds we use in the portfolio is unique. Other distinguishing characteristics include our detailed monthly commentaries and our low management fees. If you think the preservation portfolio could be a fit for a portion of your investments, please contact us. If you would like to keep up with the portfolio and follow our results, we invite you to sign up on our website to receive our portfolio updates.